Hey everyone, John Henry here, and today in the market psychology video, we're going to be talking about crude oil on a range start to the day. Now, we actually had some clues that this may happen from Friday. Friday was really kind of the big factor telling us, yeah, we may have a normal day on Monday, but more likely, we're probably going to have a little bit of a range. Now, regardless of what happened on Friday, it was a nice move down. We had a beautiful drop lower, and then they just kind of corrected the rest of the day in a nice little bull channel working its way higher. But the one problem that we have is the very last candle of the day, this humongous bull doji that formed right here. And notice that it closed right in the middle. And that's the big clue, because now all of a sudden we have changed from a strong multi-directional type trend going down and then going up and then going down into a possible range sentiment now at the highs and lows of that area. We open up directly inside of that candle, right? The highs and lows of that candle right there. And even more important information, they actually went one tick above it and turned back down. So we know that sellers are interested in selling this high rather than buying into it. So we can't look to buy. We just have to wait until we get an applicable reason to sell, knowing that the buyers are going to be more likely than not trapped at the highs, and the sellers who kind of know what's going on are going to be fading into the moves and scaling in for a drive lower. And they trap the high once, it turns back down, nice selling pressure. Traps the high again, turns down, nice selling pressure. Makes it one more attempt at the high, and all it ends up is a wick, and it even closes bearish. That is a huge bear clue that we're probably going to the other side of the range, and maybe even a little bit further. Beautiful reason to become a seller right there and drive the market down if you weren't selling at the highs already. Now, that drive lower did find some support, not a surprise. Buyers buying underneath the low, assuming that, hey, it's probably a range, I should buy low and I should sell high. And the buyers that did buy the low did get a scalp off, and that's why there's a little arrow here, because it's a nice place to become a buyer and it makes sense. Right? It makes a lot of sense. We're in a range, buy low, sell high. Everybody knows that motto. It's ingrained into our brains, right? So that's what's happening right here on this little bounce. But a bigger clue is this humongous bear candle that broke down. Now, that big breakdown candle tells us one big thing. It's still a range day. First of all, never lose sight of the fact that it's a range day and these breakouts will eventually fail. The key word being eventually, right? We know that this kind of candle right here, after a huge trap at the highs, buyers probably got stopped out and they didn't like that too much, and they may try to chase this move down. This is a very aggressive downturn off of those highs. So knowing that, sellers are probably going to sell anywhere that they can get, just looking for a secondary leg of this move down before you start seeing a correction in the upside direction. So this huge bear candle is a good reason to become a seller in the short term, just for some scalps towards the downside. Now, we start nearing the bottom edge of that end of day candle from Friday, and we start seeing some buying pressure coming in. And you can tell when they shifted, right? We went bear candle, bear, 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 a couple of bull candles in the mix, and then followed up with a huge bear candle. Sellers are very interested. But things start changing a little bit, right? We go bear, bull, bear, bull, bear, bull. You can see them losing their interest every time we make a new low. It's bought right back up again. Now, you don't want to be the first one to the party in buying these lows because, well, that didn't work very well and that didn't work very well. And this one did finally work. So, 33% accurate if you want to give back some money to the markets. So you want to wait for a little bit more information. The buyers turn up once. The sellers try coming in. Very weak sell candle, which turns into a strong bull candle, and a beautiful reason to be a range buyer off the lows, looking for a cycle back up towards the highs. Now, you'll notice one obvious thing: they didn't get the cycle back up to the highs yet, and that's the key, and that's likely because they never came down to the lows of this candle, so that's still a pending objective. But when it turns back down again, we start seeing that shift once again, bear, bull, and we're right back in the same location that we found support before. Now we have a reason to start buying at the lows for a push back higher and another nice drive back up again. And you'll notice every time now that they try to turn down, it's bought right back up again. So a beautiful example of a range type day with a breakout in the mix that eventually failed because it's a range day and it moves right back up again. So phenomenal market psychology in combination with technical analysis. You can't really go wrong with that combination. So hopefully you learned something. Hopefully you found it interesting, and we'll see you next time.